Bank Statement Cash-Out Refi. What's going on, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Thanks so much for watching today. I really appreciate it. Before we get into it, do me a huge favor. If you like these videos, go ahead and click on that like button down below. And if you really want to see some different videos, go ahead and click the subscribe button. That helps me get the algorithm out there and get my message in front of as many people as possible. So I do really appreciate it. I'm very grateful for you watching this video. So I just want to say thank you in the beginning here before we get started. So today what we're looking at is a bank statement cash-out refinance. And so who would be a candidate for a bank statement loan, first of all? So it's somebody that's going to be self-employed, and you have to be self-employed to be able to get a bank statement loan. And what this means is if you're self-employed, you don't get the traditional income coming in from like a W-2 or a salary or an hourly type of a job. You're somebody that's going to have to generate your own income by yourself. So you could have a sole proprietorship, you could have an LLC, you could have a C corporation, you could have an S corporation. All those things will be technically considering you as a self-employed borrower. And what would you want to do if you were going to take cash out on a property if you're self-employed? So there's a couple things that you could do. Number one, you could pay off debt. Yes, your mortgage will be a higher rate, but especially if you bought or purchased a property in the 2020, 2021, even early 2022 timeframe, you probably have a pretty good interest rate. But if you're consolidating debt and you have a lower monthly payment going forward, that's something that's really helpful in terms of cash flow, especially if you're a business owner and you have inconsistent income coming in on a monthly basis. You could improve your property, things like updating your kitchen, adding a bathroom, kicking out a wall and making a room bigger. Those are all things you could do with this cash out money. And then even padding your savings. So, as things get tighter in the United States, everything costs more with inflation. Padding your savings might be a good idea to keep that cash for a rainy day. Maybe you have a seasonal business and you need the cash to be able to store up for the winter that's coming forth. So just an idea of something that you could do with the cash out on the transaction. So with these types of programs, we're just looking at the deposits that are coming in on your business bank statement. So this is a completely different way to qualify you. Traditionally, if you're self-employed and you want to do a conventional loan or a jumbo loan without this extra type of a qualification with the bank statement program, you're going to look at tax returns. We're going to look at things like that, and we're going to figure out how much money you actually pay taxes on. And that's what the government will lend you money on, is what you actually pay taxes on. But we all know that if you're self-employed, hopefully you have a good accountant. Hopefully you're minimizing your tax expenses, and it doesn't always correlate between how much money you actually make and how much money you're actually paying taxes on when we're doing these. So they can kind of work against each other when you're trying to buy a house or in this case, refinance a house and take money out. So make sure that, when we're doing this, that you have the ample income coming in, and the best way to look at this is through your bank statements to figure out how to do this. So in order to qualify, we're going to look at your last 12 months worth of business bank statements. We're going to need all the pages that you have in there, even if they're blank. And for the most part, most lenders are going to be looking at the deposits that are coming in, and then they're going to use an expense factor ratio to determine what's going out. So expense factor ratios can vary. The highest that I think that I've ever seen is a 50% expense factor ratio. So if you're bringing in on average, let's say $20,000 a month, you would divide that by 2. So 50% expense factor ratio, that's $10,000 a month. The reason like somebody would have a high expense factor ratio, maybe you have a restaurant, maybe you have several employees that are working for you, and so your expenses are going to be quite high in that instance. But on the flip side, maybe you run a service-based business that's virtual, online, you make a lot of money, but you don't have a lot of expenses generally, although you might write a lot of stuff off on your tax returns. In terms of the bank statement calculation, maybe it's an expense factor ratio of a 0.2. So in that instance, if you're making $10,000 a month and multiply that by 0.2, you're going to make $88,000 a month going forward with that type of a calculation. So the calculations can vary depending on what type of a business you have. So, the best thing to do is try to not calculate that yourself. Let us do it. What we would need is your business bank statements, and we'll have a lender calculate it for you. And that way, you know exactly what number we're getting into when we have a transaction. So this is just an alternative way to calculate income for self-employed borrowers. Let's go through some of the guidelines here on the cash-out refinances. So loan amounts can go up to $3 million. We can use 12 or 24 months worth of bank statements. They can be personal bank statements too. So like maybe you don't have a corporation set up, maybe you just have a sole proprietorship and you don't even everything goes into your personal account. You can use the last 12 months with your business bank statements. And sometimes we can use a combination of both. So if you have multiple businesses, you can actually look at both sets of bank statements and we can qualify you both ways. That's not with every single lender that I have and that I work with, but it's worth a lot of them. You can do 30-year fixed and ARMs are available. I would say that ARMs are fairly common in the bank statement realm. You're going to need interest only is also a possibility on these. And what I like about interest only is that it can really help you improve your cash flow. So especially if you have a business that has variable type of income coming in and months are not the same and you have a lot of variation in a range, that interest only payment will help keep your payment down to a minimum. But the cool thing about that is that you can always pay more, but you can never pay less than the minimum payment. That's what I always tell people with any type of a mortgage anyway. So it's especially helpful if you're self-employed, especially have some variability in your income. You need as little as 3 months worth of reserves. And what's a reserve? It's just a principal, interest, taxes, and insurance monthly payment multiplied by however months we have. And so in this case, it's 3 months is the very minimum. The more reserves you have, oftentimes that's a compensating factor, and that'll give us a higher amount of, or a better credit profile, a better interest rate when we're going forward with these types of loans. And you can take cash out with a bank statement loan on primary residences, second homes, even on an investment property. So if you are self-employed and you want to do these types of loans, definitely reach out to me and we'll figure that out. Credit scores down to as low as 660. And again, kind of with a credit profile, the better your credit, the better the terms are going to be for your interest rates and reserve calculations and whatnot. So make sure that you get your credit up if you have lower credit, or you keep your credit up if you have great credit. And lastly, you do need typically a 2-year self-employment history. So that's concurrent or similar to the conventional side of loans when we're doing those types of loans as well. So 2 years is pretty standard. Most people meet that requirement. There's some special cases and special instances where you can have less than 2-year employment history. But what I found is that the rates are not typically as great. The lenders are not typically as great that do those alternative types of programs. But still, make sure you reach out to me. And if you want to have a conversation about that, just let me know. So hopefully you enjoyed this. If you have any questions about bank statement loans and doing cash out refinances, I'd love to be the one that helps you out. I'm going to put my calendar link down below. So go ahead and click on that and let's schedule an appointment to talk. Thanks so much for watching, guys. I'll see you on the next show. Have a good one. Bye.